Hello everyone, welcome back to Bitcoin Mina. We've already had two amazing panels and an incredible fireside chat. Arena is such an amazing moderator and she touched on some amazing points, particularly the election which happened recently, which of course was one of the main triggers for the absolute crazy push in price of Bitcoin. And tomorrow on this stage, we will have Eric Trump right here in Abu Dhabi speaking on this stage. I'm extremely excited about it. But as I say, we have lots of amazing speakers along the way too, who are going to be giving all of their incredible expertise to all of you. Now, as we were just discussing about regulation, I think it really is important to mention that no matter which jurisdiction we're in, everyone is trying to very rapidly take on board this regulation, whether it be when we were in Europe for Bitcoin Amsterdam, when we were in Asia for Bitcoin Hong Kong. Each jurisdiction has a very key role to play in the adoption of Bitcoin, and a lot of that is going to be down to regulation. As I mentioned before, I wasn't a huge fan of discussing regulation when I started out on this industry, and I hate the idea of over-regulation. I think it's really important that we allow innovation to prevail and make sure that all of the different businesses coming here to the UAE were able to adapt, work together, and really build this industry. But regulation will be a key part moving forward within this industry. So it's really exciting to hear from the key members of the exchanges as well how we are going to be taking on that regulation. And being someone from Europe myself and getting to travel back to Europe, I think it really is key to see what is happening here in the Middle East. And hopefully, I pray to God that that transitions back to Europe, because Europe right now, I can say in my own words, is pretty far behind when it comes to the adoption of Bitcoin and crypto. So I think, yeah, it's exciting what can be done, but let's just hope that regulation is a big part of that. So we are moving on to our next fireside chat today. I've been looking forward to this fireside chat. So please join me in welcoming to stage. I think they're all ready to go in the background. This is all about Bitcoin and portfolio theory. Please welcome to stage Lukas from BitPanda and James Van Straten from CoinDesk. Let's get some energy. Round of applause. Come on, guys.
Hello everyone, how are you all doing? Come on, it's a bull market. So my name's James Van Straten, I'm the senior analyst at CoinDesk, and today with me is Lukas from BitPanda. Lukas, could you just tell everyone a bit about yourself and what BitPanda do?
Sure, hi everyone, and also good morning from my side. Nobody would have thought that probably in December this year we already are above 100 or around 100K, right? So what are we doing? We are at BitPanda. We've just heard about Europe, right? And how Europe is behind when it comes to Bitcoin adoption to a certain degree. BitPanda, since 10 years in the space, we are the largest European crypto platform actually, providing in Germany, we're market leader, Austria, Switzerland, France, Italy, and other markets, crypto services to 30 million users across Europe. On the one side, on our own retail platform, where users can easily invest into it, but also, and I think that's always when it comes to how Europe at least is on the forefront of innovation when it comes from a regulatory perspective to it, we are supporting 13 different banks, including Deutsche Bank, for example, and others, getting crypto to their customers.
Thank you for that. I just want to take a moment and just look what's happened over the last 14 months in terms of Bitcoin price appreciation, but also from an institutional perspective. So in about September, October of 2023, Bitcoin was around $25,000. And from Q4 of last year, we saw the front running of the US spot listed ETFs that occurred in January. And the futures market, specifically the CME, the Chicago Mercantile Exchange, became the largest futures exchange, overtaking Binance. They have around 35% of the market share. Binance being primarily crypto native, so retail. And that really front ran the bull market into January. We then have from January or Q1 of 2024, we had an all-time high around 73,000. And then from 73 in March, we had this 7-8 month period of consolidation, and the sideways price action just involved a lot of leverage being blown up. We had a lot of sell pressure from the German government, and but continued to see these huge inflows from the US-listed ETFs. Within the sell pressure, we also had the yen carry trade unwind in August, and this kind of paved the way for an explosive price action in November with the red wave from the US election. But in this period of time, we've seen the US-listed ETFs now hold 1 million Bitcoin. BlackRock's IBIT has now surpassed about $50 billion in assets. It's the quickest ETF ever to do that. And we've now just had the Fed chair, Jerome Powell, say Bitcoin is digital gold. President Putin also said Bitcoin is unstoppable. And coupled with the ETF adoption, we've had public treasury adoption on the balance sheet. This is MicroStrategy taking over 400,000 Bitcoin. They've just announced the largest ATM offering in capital markets history. And you're now seeing these copycats such as Metaplanet and Semler Scientific with huge share price appreciation. So for me, this is year one of institutional adoption. And I think, Lukas, you can agree that with the ETFs and then with this corporate adoption of Bitcoin, this is just the start, essentially.
100%. I think when we speak about institutional adoption, right, it has a broad variety of different ways. On the one side, the ETF in the US, as you just said, right, opened that up quite strongly. But what we also see is that regulatory clarity, and this is what we have here now in the UAE, this is what in Europe is going to kicking in from next year onward, right? Enabling suddenly also companies, large corporates, to think about how they can add Bitcoin to their balance sheet. And I think that's a very, very interesting thing.
So we've just gone through 2024. Could you just tell us crypto's journey prior to 2024 and BitPanda's role in driving this adoption? And then after that, could you just tell us your expansion into the MENA region, please?
Sure. I think important to know is, and to understand is also in Europe, right? Until recently, there was no regulatory clarity about how to handle crypto. Therefore, banks, especially as all financial institutions, were very risk averse and very crypto averse, right? Banking crypto companies is a hard thing for them, it was at least. And on the other side, also even thinking about adding crypto to their service offering was something they were completely against. And this changed dramatically over the last 18 months. So what we see nowadays is that large financial institutions, Deutsche Bank, Société Générale, and other banking groups across Europe are not just adding crypto as an asset class to the service offering, but also think about how their platform can support long-term blockchain technology and also Bitcoin from an investment perspective in general. And this is how we as BitPanda over the last 10 years were driving this adoption in educating these financial institutions and also regulators like BaFin in Germany or the FCA in the UK very strongly.
Yeah, so you could just tell the audience why essentially regulations and custody matters for this space.
Exactly. I think custody is always the foundation and the base layer, right? In the end, it's a commodity. You need to be able to custodize Bitcoin. You need to be able to custodize assets. You need to be able to interact with blockchain technology when it comes to tokenization in general, right? But, and I think that's the essence, it's only a starting point. So answering the question about how to solve the custody topic just opens up for you as a company, as a bank, or any service provider in the space, right, about what to do next and what to do else. And I think that's then when the tricky part starts, actually, how can you interact with that on-chain activity?
So after the bear market during the bear market in 2022, did you see a lot of trust erode, and how did you build those relationships up?
100%. I think the whole FTX disaster and the aftermath of it in the bear market eroded a lot of institutional trust. I think before that, also in the US, we already have seen banks moving into that space. But then afterwards, this changed dramatically, right? So I think the last years were about building back trust, mainly on one foundation, regulatory clarity. And I think here, the UAE and the MENA region actually is on the forefront of it because they cherry-picked the good parts of European stuff, of UK FCA regulation and other things to build an ecosystem where crypto companies and blockchain technology can actually thrive. And that's something which I'm curious about how Europe and especially also the US will pick that up in the future.
So one of my biggest concerns going into 2026 is as I alluded to before, the copycats of this MicroStrategy playbook and all this leverage that's essentially going on, high interest debt payments, there could be some blow-ups, similarly to the 2022 bear market. How would you reassure institutions or reassure customers that this may happen, may not happen, and do you provide that clarity?
Sure. I think on the one side, volatility is part of the game, right? That's the reason why a lot of us are in that asset class and why the interest is there. That's the positive thing about that asset class. It's much more about how to build trust long term, right? And this is where I really believe that regulatory clarity in the framework gives not just crypto companies like us, but also institutions, a clear way about how to handle that volatility and how to handle that risks. And the things which happened in the past, which led to these blow-ups, either that customer funds were stolen or that they were misused or other things, I think the whole regulatory framework is now taking care of that. And on the other side, the industry is growing up, right? I think you can see it here today. You can see it over the last couple of conferences. Adoption is there across the society.
Yes, exactly. So with BitPanda, you have more than 5 million retail users, several institutional partners. So what does this mean for retail investors whilst having both retail and institutional?
Sure. I think for on the retail side, 2017 was heavily driven or only driven by retail, right? 2020, 21 bull market, mostly too. I think we are for the first time in the bull market, which is driven by institutional adoption, started in January with the ETF and adding retail additionally. So I think for retail, it just supports strongly the case of establishing as a long-term store of value, and Bitcoin in the end is that. It's digital gold, right? And I think we all are convinced sitting here today that it is not just that, but that also now the world and also banks are starting to recognize that. So I think that's a really positive thing nowadays. Yeah.
So what are your or main concerns, or is it just like kind of a rose-tinted view for the next 12, 18 months?
Concerns, I think adoption always takes time, right? And adoption takes not just time in regards of governments, but also within companies, corporates and banks to actually establish it there. So this will take time. And I think in 18 months, we will be much far ahead as we are as of today, but even more in 36. So it's a long-term game, but I really believe that crypto and Bitcoin especially will be fully established, as we've seen nowadays already in Europe, already in Singapore at some financial institutions there, and I'm pretty sure also in the near future here in the region, but also in the US. That's interesting.
So in 2017, as you alluded to, that was very retail driven. That's exactly where I got into. I actually bought the Pico top in 2017. And then 2021, I would say, again, retail driven, but I think a few institutions were trying to come into the market. With this run, where do you see this? Do you see this as an institutional drive, or is it still very retail driven?
I think it got started by an institutional drive and adoption of the ETFs, and then just fueled tremendously by suddenly the US opportunity for the whole industry due to the Trump administration incoming. And I think retail already now is already part also of the current interest and positive market sentiment, but it's not the only one. And I think therefore the large spikes will be interesting to see about how much long-term inflow just constantly from the institutional side will be there to flatten out a little bit probably the cycles, or on the other side at least the price fluctuation.
So what is the typical retail allocation to Bitcoin and the typical percentage allocation from these institutions?
Yeah, that's a super interesting question. I think if we look into the data, right, everybody would believe that most of the people are buying Bitcoin. And I think we're here at Bitcoin Mena today where we are all huge believers in that. And hopefully everyone in the room here owning it. Nevertheless, I think mass market retail only has a Bitcoin allocation of around about 30% if you look into the data. The rest of the is into the long tail other crypto assets and cryptocurrencies. And that's probably the largest difference when it comes to institutions and institutional adoption, where currently mostly the allocation up to 90 to 100% is into Bitcoin. Because the store of value, the long-term idea of Bitcoin is for them so attractive compared to investing into blockchain technology like Ethereum, Solana, and other coins, where it's not the store of value, but it's much more about technological adoption, right? And this is much more on the retail side.
So would you say if you had to put a number on it, it's around maybe 1 to 3%? in terms of a portfolio, or you can't give me a specific number?
Sure, yeah. I mean, honestly, if you look on companies and banks like Bear, for example, they are even probably the only one currently advising on crypto as an asset class from a banking perspective. And in general, from a portfolio theory perspective and diversification perspective, 1 to 3% in a high risk, high yield asset class like Bitcoin and crypto would be actually, from my view, a very good one. Nevertheless, we'll see how the asset management and the wealth management world will adopt that.
Okay. And then going on to the other side, like how do you view the stablecoin market, for example? There are theories going around that the US government could essentially inflate the Bitcoin price, which will see a huge demand or an influx into the stablecoin market, which is already around $150 billion market. And then with the stablecoin growth, like Tether, who are one of the biggest buyers of US treasuries, that kind of seems like hand in hand the US treasuries will start being bid up by Tether and other stablecoins. So what are your projections for the stablecoin market, and how do you differ it to Bitcoin and crypto?
Yeah, I think, first of all, booming, right? Stablecoins all over the place. But if we look a little bit back in time, the main idea of banks and payment companies and networks and even governments was about private blockchains, right? That moving value where it's backed by some type of fiat currency is on the private side, is on the governmental side. Even in Europe, there's an initiative with the digital euro being fully private and backed and owned by the central bank. But I think that narrative got changed. That narrative got tremendously changed over the last 12 to 24 months when stablecoins on public blockchains, and I think we see it booming across the world, here in the region, in Europe, especially with MiCA and stablecoin regulation now coming in, but soon-ish also in the US for sure, that it's here to stay on a public way. And then suddenly moving money around the globe will get much, much cheaper, and I think there are a lot of different players currently per region, per currency, in the play. We are super early, and we will see like who will pick the most market share for each of the local currencies, because that's the interesting game, right? Not just the US dollar tether game, but especially also from a local currency perspective.
And with all this regulation that's coming into the market, do you think this is going to stifle the innovation, or it's needed in terms of actually moving the industry forward?
I think it will accelerate it, right? One thing is for a certain amount of society starting an idea, moving that in, trying to scale that and get as much enthusiasm across all of us into that. And now we are actually at the level of bringing it to institutional grade, right? Mass market rollout, getting stablecoin usage and utility across everyone out there. Same as crypto as an asset class, but also as a store of value. And I think these are the really, really interesting things over the next 2 years. We will see really mass adoption, but mass adoption not just across people, but especially across use cases, industries, and that's super interesting.
So you've been an industry leader for essentially almost 10 years now. What are your biggest learnings that you've learned? Could you give it like maybe from a market by market perspective, or from any kind of angle to break it down?
Yeah, I mean, our biggest learning being that long in this space, right? I think we started 2014 when more or less there was nothing there, as you all know. It's about education, right? It's educating end customers, it's educating governments, it's educating banks and institutions about what Bitcoin is, why store of value and digital gold is so valuable and important for all of us, and also what the technology long-term can bring, which is the underlying one. So I think we definitely still need to go a long way down the road until everybody is here on board, but we are on that path and on a very good path. So it's education.
Before the US election, mainstream media would have said it was a coin flip between the Trump administration or the Kamala Harris administration. Was this something that you were preparing for on either outcome? And how big do you think the outcome is moving forward for the Trump administration to win? And looking at his essential cabinet, how many crypto-focused people there are in there, how big that is moving forward?
So for sure, we as a lot of other crypto companies prepared for both cases. I think in general, both are leading long-term to more or less a similar view in a similar situation. Nevertheless, Trump is just accelerating it by far, right? I think we need to see and observe next year and the year after how much action will follow the words of the last weeks and months. Nevertheless, the direction already is looking very positively to get not just the US back on track when it comes to blockchain technology, but also to get it to speed up regulatory clarity, adoption across users and also institutions. So I think that's just important to have not just Europe trying to catch up here, the UAE region on the forefront of innovation, definitely, but also to get the US at the proper pace for the whole industry.
Okay, so my last question to you is, if we're looking at the next halving, which is in 2028, and then maybe even the halving after that, 2032, where do you see the market? Where do you see adoption? Do you have any statistics or data to back it up, where you think this is going to head?
I think in 2028, at the next halving, we already see that there is clearness and regulatory clarity for the technology in most developed countries, ideally also in even more on the emerging market side. Plus, also on the other side, like banks will speak so much about halving and what it means for the asset class and how this actually will affect it, which we have not seen at all in the past, also not in the last one. So I think that will be the major difference to the next one. What comes after, I think we all are long enough in the industry to say we don't know yet.
Thank you very much.
Thank you, man.
Is your company ready for the next evolution in financial strategy? Bitcoin for Corporations is your partner in securing the future of your business. With exclusive membership benefits, our comprehensive masterclass, and a network of trusted service providers, we provide the insights and resources to help you incorporate Bitcoin into your financial strategy, ensuring stability and long-term value. Strengthen your business. Innovate with confidence. Bitcoin for Corporations, protecting your treasury and positioning you for the future.